Hi, you're watching ET Markets Live. I'm Neha Vashisht from the Economic Times. Welcome to a brand new episode of ET Market Wrap, where we decode everything that happened during the week. Joining me today is Sonam Srivastava, founder, Right Research. Thank you so much, Sonam, for taking out time and joining us today on ET Markets Live.
Thank you for having me, Neha.
Well, the pleasure is all mine. So let's start with a Fed rate cut overview first. So the Fed trimmed the rates by 25 bps. I want to understand how significant is this move when we talk about global investors and global markets, and what message do you think it is sending to the global investors right now?
I think it's a quite a significant move. The
Hmm.
rate cut. This is the first rate cut by the Fed in this year, right? This calendar year,
Yeah.
and
Yes.
we've all been waiting for the Fed to cut rates, but they've been highly data driven in their approach. The inflation has been high in the US, right?
Hmm.
Due to which they have sort of shied away. Plus, I think they're worried about the tariffs and stuff like that, right? But see, I think right now, Neha, if you look at the global yields, right, what you would
Hmm.
realize is that 25 basis point is a very small cut, right? What we really need is almost 150 basis point, 200 basis point of cooling off for it to have a significant impact, right? So while
Hmm.
the Fed has made the first move, I think in the announcements there was not like a lot of confidence that was given, right? They will keep on cutting rates. They said that will be data driven and this consensus that is lacking. I think some Fed governors want 50 basis point, others want 25 basis point, right? See, I think it's a
Hmm.
good start for this rate cut cycle, but the whole impact will come when more rate cuts come, right? So when the rate cut cycles start, initially people
Hmm.
expect consumption linked stocks to do well, and the people expect IT, pharma, those type of stocks to pick up, and then they expect the growth rally to come back, right? So a good starting point for that. But like you say, it is just the starting point. It's not the finish yet, right? So
Yeah.
I think the Fed is going to be data driven, and they will sort of look at uh, how the flow goes right from here.
All right. Now, coming to the global market impact, Sonam, in the near term, how are global markets likely to digest this rate cut? And do you see this fueling more liquidity-driven rallies, or there are risks of US slowdown and European uncertainty right now also?
Right. See, see the rate cut is definitely a great move, which will bring confidence about global growth, right?
Hmm.
But there's still a lot of uncertainty, especially with Donald Trump in power, right? You see that the decisions come in a very ad hoc fashion, and these tariff announcements. There's a lot of conflict going on in the global trading scenario, right? You can see the whole
Hmm.
geopolitical scenario shifting. Now India, making friends with China, etc. Right? So I think there's a lot to be solved, right? But definitely this is a good move. I think, like I said, 25 basis point is a starting point, and we need another 100 to 150 basis point cuts from here for
Hmm.
all the rush towards bonds to cool off, right? The bond rally to cool off, and sort of growth to come back in the global economy. So I think you see it will give some confidence to the global. I think various markets reacted positively, but again, this was all priced in, like 25 basis point. Everybody was accounting for this is going to happen. So you did not
Hmm.
see a big reaction on the day. Even in India, there was a small rally, and you saw IT actually did positively, which is what people expect. That if US growth comes back, then IT sector would do well.
Yeah.
But not a very significant move. Even people expected dollar to cool down, but rupee
Hmm.
actually has inched upwards, right? I think rupee has been weaker, so a significant cool down on that front will come only with more cuts, right?
Right, right, right. And they are saying that there will be at least six more rate cuts, but till by the end of like 2026, which is a long time later on in the next year. For this year, I think it is lesser than what we expected, and the first rate cut is happening at the ninth month of the year. So I think it speaks a lot about what's happening globally. Sonam, let's come to India now. Specifically, when we talk about India, how do you think this Fed rate cut will shape the flows into equities and debt in the short run?
Right. So see, even in India, the yields have been high, and even after the announcements, right, it has
Hmm.
added a little bit. If you heard the governor talk, he's not been very dovish. He's slightly hawkish in his commentary, right? Uh,
Hmm.
so yields have actually inched up instead of going down. And like we discussed, equity market has a positive reaction, but nothing extremely significant. I think it has
Yeah.
brought some relief for sure, but there's no euphoria as such. And even on the currency front, Indian dollar is under pressure. I
Hmm.
think, see, once we get more rate cuts and the prediction markets show that there could be maybe another 50 basis point this year, right? But there's no,
Hmm.
but if that happens, what would happen is the INR depreciation would pause maybe, right? Yields would stabilize across the world in India, in the US, in Europe, right? And that is what
Hmm.
would really give us a significant boost from here, right? But a lot of it, and even FPIs, will start favoring emerging markets once the rates cool off, right? So
Yeah.
it would be a significant event once that happens. But like you said, there's a path ahead, right?
Yeah. Talking a little bit more about FPIs and FIIs, do you think that this 25 basis point rate cut could turn them more aggressive in the Indian market as of now, or do you think that there is time for that?
Yes. So see, I think, like I said, once we have a significant number of cuts, then emerging markets will become much more attractive, right? You
Hmm.
will get good growth out coming out of emerging markets, and that is when emerging markets will get attractive. When dollar depreciates, when your yields come down, I think that's when EMs will become attractive. Right now, it is same. It is people are still. It's not convincing yet, right? Like we're discussing.
Hmm.
So right now, what will work in the Indian market would be earning driven stocks and idiosyncratic events, right? That is what would drive
Hmm.
rally instead of you can choose one particular sector. You cannot just say okay, IT is going to do better from here or something. Even the growth in consumer stocks is something people have been talking a lot about, but
Hmm.
that also depends on the global risk, right? So, see, I think so right now FPIs will come in specific stocks, earning driven and stuff like that. I think if we get a
Hmm.
good earning in this quarter, I think that would be great. But for FPIs to come back in bulk, right? You need, I think, more rate cuts and cooling down of the yields as well as cooling down of the US dollar, right?
Right, absolutely. Sonam, it's quite hard to predict what's going to happen in the markets, and it is quite hard to predict which stocks or maybe which sectors could perform well, but there's always a direction that investors can go into. So I wanted to understand which Indian sectors you think that are likely to be biggest beneficiaries of a lower US rate environment as of now and in the future also. And on the flip side, let's also talk about any sectors that may face headwinds despite the Fed's easing stance?
Definitely. See, I think right now you would see in the near term, these cash generating tech platforms, right?
Hmm.
Quality companies that are posting high growth, those will be in flavor, and like we said, it will be earning driven. But initially, typically when a rate cut cycle happens, for the initial
Hmm.
portion of it, you would see defensive stocks like staples, utilities, healthcare, those do better in the initial few months, right?
Hmm.
Um, even housing does well, and housing linked stocks from cement to home improvement stuff like that, right? All of those stocks will also have a good path ahead. So we would like that. Even I think metals would be interesting, right? If the rate cut happens and it boosts growth, then you will see the commodity prices picking up.
Hmm.
So I think in terms of favoring stocks, we would like consumer for the short term, right? As if the
Okay.
rates are continuing in the long term, I think IT and pharma could do well, right? And
Hmm.
what to avoid right now, again, have to be data driven. IT could surprise you very
Yeah.
positively, but right now we have to be very careful about.
All right. So you think that IT, if someone wants to invest in IT, they should be a little stock specific and do their own research before getting into that. And because a lot of experts are saying the same thing, that IT is a good deal in the long term, but in the short term, nothing can be predicted or maybe said about IT.
Yes, so see, in terms of the large cap IT, your Infosys, TCS, HCL Tech, etc.,
Hmm.
it's a lot of negativity built in the predictions, right, by analysts. So they,
Yeah.
they are all accounting for lower growth rates, even degrowth at some in some pockets, right?
Hmm.
And that is primarily because the growth in the global market, their client segment hasn't been that robust.
Hmm.
But see, if the rate cuts happen and that growth picks up, then you will have positive surprises, right? That okay, we were expecting -2%, but it came up positive, right? The growth rate.
Yeah.
So that could happen, but again, it has to be data driven. We'll have to see numbers from earnings, from announcements coming from companies. But yeah, I think a lot of domestic IT companies have been doing well, right? Like
Hmm.
or specific IT companies, for example, e-clerks. Even today, you're seeing Reddington, right? The stock which has been doing
Yeah.
extremely well. So specific pockets definitely are you have to look for them.
All right. All right. Let's come to the market outlook for investors. What is your short-term outlook? Are we looking at further upside in the markets, or we could expect a consolidation phase right now? And also for retail investors, what is your strategy that could help at the current levels?
So I think in terms of our outlooks, we definitely are bullish, but I would say
Hmm.
mildly bullish. We are optimistic and more optimistic than before, right?
Hmm.
Uh, so I think, but it's not all clear yet, right? There are still tariff negotiations going on, even for India, for China, for different geographies. Plus, the rate cut cycle, has a long way to go. Even with these tariffs coming on, the US economy could go into a
Hmm.
cycle of high inflation, low growth, stuff like that, that the Fed will have to counter. So the rate cuts might not come at a very fast pace. So we actually have to be careful of that. But it's an encouraging move. This rate cut, we are mildly bullish, and what we like right now is again, companies which are posting good numbers, high
Hmm.
quality, as well as good growth, right? So it is sector agnostic right now in terms of sectoral balance. The shift has happened in favor of domestic and consumption focused stocks, but
Hmm.
I'm also looking at IT and even a lot of pharma companies which have been under pressure to come back, as the numbers come in.
So, do you think this is a buy on dips market, specifically if we talk about companies that are good and strong fundamentally?
Definitely, this is a great market to accumulate because the rate cut cycles, as
Hmm.
and when they come, they will, and even in anticipation of that rally, or of that rate cut, there would be a lot of movement in the market. So definitely, it's a market to accumulate a good set of stocks.
All right, Sonam. Well, this marks the end of our segment for today. Thank you so much, Sonam, for taking our time and joining us today on ET Markets Live. It was a pleasure talking to you.
Thank you. Thanks a lot.
Thank you, everyone. Thank you, everyone, for joining us today.